Welcome to the Orbit. It is Wednesday, March 27th. We've got futures higher. We're going to start the market in the green today. We're looking at SPY up about 0.5% pre-market. That is after, as you can see on that chart, the end of yesterday, the close, the last about 45 minutes, let's call it. We saw a steep sell-off in the market, sort of out of the blue. Took us down to about 5,200 in the SPX. We have bounced off of that. That was the result. A lot of traders are attributing that to a sell imbalance, large sell imbalance into the close. The way sell imbalances work is they start to get posted the beginning of that hour, that 3 o'clock Eastern hour. The sell imbalances themselves actually happen near the close, but what traders do is they sometimes try to get in front of those sell imbalances or buy imbalances into the close. Usually it doesn't make that big of a difference in the market. You'll see somebody post the sell imbalances for the day. Usually the market kind of shrugs it off. But in a thin, potentially slow holiday trading week, it was enough that it caused that quick sort of 20 to 25 point sell-off in the SPX into the close. Now, as you can see now, the market is shrugging that off. Traders are shrugging it off and saying it was just a weird market move into the close. We'll see if they are correct. And if this opens strong, perhaps it's sold. People need to play some catch up, and that's attributing to this rally this morning. As you can see, the expected move here in SPY and SPX is about 0.4%. So we're already higher than that level coming in. And you can see the new levels based upon that pre-market price with about 519 on the downside and 524, let's call it, on the upside. And that's 19 vol. That's a little bit higher than we saw the previous 2 days this week, but it is still quite low. That's a low IV for 0 DTE for short duration. So again, a reminder for traders with out of the money credit spreads to potentially close them. You can, of course, do that synthetically in a lot of cases and take off that risk on the other side of the chain. If you're short a credit put spread, you can do the same strike credit call spread. And the math is pretty easy on that. If you wanted to take it off for 10 cents, let's say you are selling that in the money credit call spread down on those same strikes at 490 if it's a 5 wide. So that's how that works. Going to QQQs, we have it up about 0.6, almost 0.7%. And the expected move was about in line. We're already up in line with what options we're pricing. So we'll see how the market reacts here. Does it find sellers immediately? Does it sort of just go sideways to this level and then everybody kind of crosses their fingers for the last hour? Or is that the type of move that has shaken out some weak hands? Was that what the market needed to potentially go higher than that sideways action we've seen over the last couple of days?